Welcome back, guys. Today one of my friend, he actually is not friend, he's my brother. He told me to talk about the balance price range, how to use the fair value gap. Actually, how do you know this fair value gap has traded? Yeah, the price won't come back over here. So he asked me all of this question and told me to make a video about this. So I've decided to talk about the balance price range a little. So let's go to the topics. I think after this video a lot of things will be clear for you guys. So here is the 5-minute chart. I would like to talk about this fair value gap, all of this over here. Let me start from here actually. Okay, let me mark it first. There is a very little fair value gap. Uh, Before utilizing the gap, you have to know the bias. It's very important, guys. As my bias is bullish, so I will expect the bullish price action. This gap is called buy side imbalance, sell side inefficiency. So market go, come back. Specifically this candle, it has closed this gap. You see this gap, it has closed already. When the market goes again through this gap, there is also a gap, maybe a little gap, whatever. This is not balanced. It needs the sell side delivery. Here we got the sell side delivery. After giving the sell side delivery, price should reject this place. It happens over here. How do you know that? How long actually how long it can go? The price should react to the upper level of the gap or the consequent encroachment of the gap. We can go through this, all over this, it can go through, but the body, it should be closed upper level of the consequent encroachment. It can't close under the consequent encroachment. So price actually send the sell side over here, go through the gap again, come back to this gap and reject the price to send it higher. Now this gap is balanced. Let me talk another gap. Okay. uh, 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 uh. This is another buy side imbalance, sell side inefficiency. Price go through this, make the fair value go over here and come back. This candle actually met the need of this candle, of this gap actually. So here we need the sell side because there is the inefficiency of sell side. So this candle provide the sell side. It's not balanced yet. When price will come again to the upper level of the gap or the consequent encroachment and reject the price, then it will be balanced. You see, there is no clear rejection of that gap. Let me check here. Okay, I got it here. Here is the sell side delivery, and what I was talking about you here, when price came to the came just under the consequent encroachment, it is also not balanced. It just traded again to the upper level of the fair value gap to this specific candle and reject the price. Now this price range is balanced. Price will won't come back again over here, at least not before it's doing its job over here, maybe clear the buy side or balance the imbalance somewhere here. It will do that things first, then it can come back over here, but in a short period of time it won't come back to this gap because this is balanced. This buy side in imbalance, sell side in inefficiency, it is balanced right now. Okay, let me actually give me a let me Let me give you an example of sell side imbalance, buy side inefficiency. Guys, here is a sell side imbalance, buy side inefficiency. That means we need the buy side. So here you see the buy side. You see all of this candle actually closed this gap. It was needed the buy side. So this all of this bull candle, it has met the requirement for completing this gap, but it's not balanced yet. That means price can come back again over here. It's because it's not balanced. So you see when it close over there and it come back again here, but the bodies are closed just under the consequent encroachment. So if it closed consequent encroachment and reject the price, do not show me any reaction to the upper level or the consequent encroachment, the clear rejection. You remember the clear rejection like that. Then I am suspect. The suspicion is price can come back again to this gap. It happened over here. Let me mark it to you. See this price, you see this two candle, it actually closed this gap, this buy side imbalance, sell side inefficiency, but it actually did come to the consequent encroachment of this sell side fair value gap or sell side imbalance, buy side inefficiency. It come to the consequent encroachment and reject the price. Also this candle, it clearly make the support of this fair value gap high and send the price higher. So now this gap is balanced. That means price won't come back over here. How do you know it is helpful for us? As I'm expecting the buy side and there is a fair value gap, when price go over there, that means it break over there or something like that, you will expect a bull run. See here actually. Now at this time you see there is a there is a model. Actually I love to trade this model. It has cleared the liquidity. There is a clear market structure shift. This is the clear market structure shift, and you can say maybe somewhere here is some, maybe this one is the fair value gap. There is no fair value gap. No, 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 no. Say think this is a fair value gap or something like that. Just 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 think there is a fair value gap. So this should be your buying point and your stop loss should be over here, but I won't take this trade. It's because I know there is a imbalance or fair value gap that is not balanced. What did I mean by that? That means price can come back to this gap, then reject the price. If I take entry over here, I will have to observe a loss. So this is how you will utilize your fair value gap. If there is a fair value gap under the price which is not balanced, then price can go back to that fair value gap, then reject the price. If you really would like to take an entry, in that case when price came here and shift the market structure over there, let me market structure shift over there, and there is the fair value gap. If you take entry to this fair value gap, think like this fair value gap or there is another fair value gap. If it you see in long term, there is the market structure shift, there is the fair value gap, you took the entry over there, or think price come to this gap, you take entry, this is valid. But this on is not valid. The reason is this all of this fair value gap, all of this price action, this all of this gap is not balanced. So you have to make sure that when you will take entry, there is no imbalance or not balanced price range under your entry. If it there is an imbalance price, then price can go over that price, that fair value gap, then reject the price. I think it's little bit clear. Let me just tell you something in one word, in one sentence. If there is a fair value gap, BC or CB, I don't care, it need to balanced first. When it is balanced, then you can take entry with confident anywhere upper of that fair value gap, anywhere, until there is a imbalanced price action just under your price right there, right, that moment when you would like to take the trade. Don't take that trade. Just sacrifice it or wait until it traded or balanced the price just under your model or entry position. That's why it is important to know how to balance the price. If it is sell side imbalance, buy side inefficiency, price need to go through the gap, then need to come back to the consequent encroachment or to the upper level, then reject the price. It is balanced now. Or if it is buy side imbalance, sell side inefficiency, then price should go through that gap first, then come back, or reject the same rules. It need to actually reject first. It need to provide you the opposite thing it has. Like here is sell side, so we need buy side. Here is buy side, we need sell side. If we get that and then price come back to the upper level or consequent encroachment, reject the price, then that is balanced. You can take entry over here, or anywhere, any place you can take the entry, because this all price range is balanced now, and the price won't come back over here until it has cleared all of the liquidity to the upper level or imbalance. It need to balance the imbalance place first, then it can come back over there. I think it is clear to you guys. I know it's little bit difficult, very little bit confusing, but if you don't understand, just comment below. I will try to explain, and in next video I will try to explain about the volume balance, how to make that imbalance balanced. Thank you guys. See you again. Bye bye.